Hi, and welcome back to the channel. Want to build long-term wealth without stress, complicated strategies, or risky stock picking? The secret lies in two powerful ETFs, SPY and QQQ, and one proven strategy, dollar cost averaging. Whether you're a beginner or a busy investor, this simple, hands-free method can help you grow your portfolio over time with minimal effort. Stick around because by the end of this video, you'll have a step-by-step plan to start investing today. First, let's talk about SPY and QQQ, two of the most well-known ETFs in the world. SPY, the Spider S&P 500 ETF, tracks the S&P 500 index, meaning you own a piece of 500 of the biggest U.S. companies. This includes blue-chip giants like Apple, Amazon, Coca-Cola, and Tesla. Historically, the S&P 500 has returned around 8 to 10% per year on average over the long run. It has low fees and hundreds of billions under management. The stock has excellent liquidity and a vibrant options market. QQQ, the Invesco Nasdaq 100 ETF, focuses on 100 of the biggest non-financial companies on the Nasdaq. This means heavy exposure to technology and innovation leaders like Microsoft, Nvidia, Google, and Meta. QQQ has historically outperformed the S&P 500, but it comes with higher volatility. It has low fees also, although higher than SPY. QQQ also has hundreds of billions of assets under management, as well as excellent liquidity and a great options market. Both of these ETFs have one key important thing in common: they've grown steadily over time. But here's the catch: markets don't go up in a straight line. Prices fluctuate daily, weekly, and even yearly. If you try to time the market, you might miss out on gains or buy at the wrong time. That's where dollar cost averaging comes in. Dollar cost averaging, or DCA, is a simple investing strategy where you invest a fixed amount of money at regular intervals, no matter what's happening in the market. When prices go up, your fixed investment buys fewer shares. When prices drop, your money buys more shares, essentially getting stocks on sale. Over time, this smooths out your average purchase price, helping you avoid the risk of buying at a peak. Let's say Sarah wants to invest $500 every month into SPY. Month 1. SPY is at $500 per share. She buys 1 share. Month 2. The market drops. SPY falls to $400. She buys 1.25 shares. Month 3. The market rebounds to $450. She buys 1.11 shares. After 3 months, Sarah has invested $1,500 total. But instead of getting exactly 3 shares, she now owns 3.36 shares, thanks to buying more during the dip. When the market returns to $500 per share, if she had simply invested $1,500 once, it would be still worth $1,500. But with dollar cost averaging, it is worth $1,680. Not bad. One of the biggest fears new investors have is, what if the market crashes? In 2008, the market crashed over 50% during the financial crisis. In 2020, the COVID crash dropped stocks 34% in just a few weeks. But guess what? The market always recovers. If you kept buying through those downturns, you would have bought stocks at bargain prices. Those who panicked and sold missed out on the massive rebound gains. With dollar cost averaging, you don't have to worry about market timing. You just keep investing consistently and let time do the work. Want to start using dollar cost averaging today? It's easier than you think. Step 1. Choose your ETFs. SPY and QQQ are a great start, but there are certainly others. Step 2. Pick your budget. Even $50 to $100 per month can grow into thousands over time. Step 3. Automate it. Most brokers let you set up automatic monthly investments so you never have to think about it. My favorite broker is Interactive Brokers. I've added a link in the description if you want to know more. Over time, this turns into a powerful wealth-building machine. Let's look at a real-world example. If you had invested just $100 per month into the SPY for the last 20 years, you would have contributed $24,000 total. But thanks to compound growth, your portfolio would be worth over $100,000 today. Imagine if you invested $500 or $1,000 per month. You'd have hundreds of thousands, even millions over time. Here's the bottom line. Investing doesn't have to be complicated or exciting. SPY and QQQ give you exposure to some of the best companies in the world. Dollar cost averaging helps you grow your wealth without worrying about market timing. The sooner you start, the more you'll benefit. Set it, forget it. Let time and compound interest do the work. If you start today, your future self will thank you. If you found this material valuable, please like and subscribe, and leave a comment. We'd love to hear from you. Thank you for watching. Until next time, good luck out there. As always, the information presented in this video is for educational purposes and should not be considered financial advice. Be sure to evaluate how these securities align with your financial needs and consult with a professional if needed.